as the head of equities at DSP, specifically, if you really go out and see in the market, there are different themes, right? Growth, value, growth at reasonable price. So it's a big story around that. So you are heading equity under you, that is under equity world of around 1,90,000 crores. You specifically follow any of these things specifically to a scheme or a segment of stocks, or how these particular themes you guys are adopting? There's a reason why I'm asking that question. Later I will ask that question once again.
No problem. So see, actually what we are doing is that within our team, we have different flavors in a way. So the person who is actually handling the large cap, person who is handling our opportunities fund, a person who is handling our focus fund, they are all very fundamentally aligned. Now, what is commonality? Commonality is that our research process is a commonality, our forensic is a commonality, our technology is a commonality which is going to throw up the same amount of data. Now, how it has to be used and how it has to be implemented will depend upon the style of these fund managers. So we don't want to bucket everyone into same style or same manner that, everyone has to think that only X type of companies, only dividend yield type of companies, only cash flow generating companies, only X. Somebody is more, let's say, valuation conscious. He may not want to buy an expensive stock. Somebody is seeing that the stocks are expensive, but they still have a good legroom available for growth, good ROEs, good capital allocation, good management, and they are adding more, capturing more and more opportunities. So he may want to add. The point being that these styles are in different formats are represented in each of their fund managers. As you actually meet all of these fund managers, you will come to know what styles they are actually following. But we are promoting that till the time it is rational. It is not moving significantly from the base case kind of a scenario. And anyways, when we are creating our own universe, we've created so much of guardrail. We know that broadly, we know a lot of the big risks we have anyways covered. Okay. Now let the fund managers basically implement their style and framework in their funds. And the way we want to measure them is that they should be able to beat the benchmark. So now they know they're aligned, they're matured, they know what has to be done, and within their framework they are able to execute. Other thing which I wanted to also highlight here is that I think we again are unique to have shared all our fund framework document by all the respective fund managers, which are available publicly. And hence, I would say that once you read those, once the investor is aware about what and how it is managed, then I think it will create that sync or what do you say, alignment. Investors will be aligned to how where they are allocating the money to, which fund manager they are allocating the money to.
Okay, that's how you operate. So you are not specific to growth or value or.
So personally, I am growth at reasonable price kind of an investor. Okay. Rohit is slightly more value conscious. Abhishek Singh is having a value orientation. Bhavin is more aligned to the expected growth and capital efficiency framework. So we have a bit of difference in
fund managers there.
We have 5 fund managers, 5 or 6.
The reason why I raised this question, Vinit, because what happens with the market is, we understand DSP FlexiCap portfolio we are seeing it from a long time. So there are some schemes which are with value concept, with growth concept, with And I was hearing to the latest presentation by Howard Marks. If you really go back and see the first theme of value, vis-a-vis what he told Money Control last week is that if I find value in that company to invest, I will invest. But the first definition of value is entirely different from the latest definition of value.
Yes.
It's changed. Actually, I was seeing all these things because during 2007, when interest rate was at the bottom, people said value peaked. And because there is no value in value. So that was the story. And what happens as a distributor, we are in this business for 20 years. What we do is, we will give you a package of 2 or 3 or 2 FlexiCap schemes we give. The way you have a pressure, performance, investor has a pressure that I have to make more money. They will meet someone or the other here and there. They will give portfolio to someone else, maybe a competitor, banking guy or somewhere. There what happens, say take an example, so there is a scheme with growth concept vis-a-vis value concept. In 2018-19, if you see, the fund with value was miserably underperformed.
Absolutely.
And growth was at the
High point.
now ये portfolio उधर गया, टक करके मैसेज आ जाता है, श्रीधर इससे निकालो. The conversation between me and the customer, the other person don't know.
Yes.
He said, I can't pass any comment, we are in the public media. So at the end of the day, my experience with some of my customers is that they buy high and they sell low.
Yes.
You understood, right?
Yeah.
They all come to value. Now value is at the top. Now when you see their portfolio, those growth is slowly coming back. Now they want to come back to value once again. It's a big irony. Why I am highlighting this in this particular forum, because somewhere investors should be prudent. We can't talk much about them. That is the core of every business. Within distribution, if at all we are discussing about others' portfolio, we should be really honest to the money rather than our business motto.
Yeah.
And one more challenge in the social media we are seeing today is that SEBI said one flexi cap. Under flexi cap, there are 3-4 different themes, right? So there may be 30-40% common stocks, but no one knows when fund A bought and when fund B is going to sell.
Yeah.
Yeah, none of these things are captured in the media, but at the end of the day, for the benefit of the viewers, I raised this question.
Sure.
Yeah, this is a big issue actually.
No, you're right. So I think the good part is that we have been very transparent around our communication. Investors can actually look up our documents on our websites. They can understand each fund manager actually very minutely and in a detailed manner when they go through the documents, so that they know that how their money is going to get deployed by the fund manager. But broadly, I can say that we as a house are more quality conscious, as you can understand from our forensic and all these guardrails which we are building. So from a very long-term perspective, I think this is going to be the most important factor, that if we are able to eliminate bad quality actors in our portfolio, that is going to be a positive thing. Then in terms of the gradation of growth and value, either it will range from growth at reasonable value,
Correct.
funds like my funds into that domain, to let's say Abhishek Singh, who's managing top 100, he's most valuation conscious. And then Rohit one layer ahead, Bhavin one layer ahead, me and Resham in that bucket of growth at reasonable value, who's, by the way, Resham I want to introduce as the small cap fund manager who's taken up the mantle quite well and aligned to our core thought process theme. And so we are actually following that growth at a reasonable price kind of a concept.
Okay.